what we see today. What we see is called an inverted yield curve, where as you go out the maturity curve, the interest rates go down. Right now, today, the 3-month bill, which is, I think, is one of the shortest maturity U.S. Treasury bills, is about 5.1%, a little higher. And the 5-year note and the 10-year note are around 4.1%. So why would you take, I'll use round numbers, why would you take 4% on a 10-year note when you can get 5% on a 1-month note? What's up with that? Well, what that's telling you, it's telling you something. It's very powerful.
Okay.
Because this market is the big money. These are banks, hedge funds, sovereign wealth funds, the largest pools of capital in the world, and therefore, in theory, the most sophisticated investors. When they're betting that interest rates are going to drop 6 months and a year from now, what they're saying is there's going to be a recession.
In a recent analysis, renowned economist Jim Rickards delves into key indicators pointing towards an imminent recession in the U.S. economy. Highlighting the inverted yield curve as a critical signal, Rickards underscores its significance in economic forecasting. Despite short-term Treasury bills offering higher interest rates compared to longer-term notes, major investors are positioning for a future drop in interest rates, signaling a potential downturn. Moreover, Rickards contrasts this with Russia's robust economic performance, citing factors such as labor shortages and successful military strategies in ongoing conflicts. For more insights on global economic trends and financial strategies, remember to like, share, subscribe, and turn on post notifications for our channel.
And I was right about everything. Today, the biggest problem in the Russian economy is a labor shortage. That economy is booming. It grew about 5% in the fourth quarter of 2023. The ruble is stable. It had the big dip, and then it came all the way back, and then it was stable for the better part of a year. Over a year, went down a little bit, but not a lot. That had to do with oil prices. If they have an economic problem, they have a little bit of inflation, which means your economy is running hot. So Vera Nabiullina, who's the head of the Central Bank of Russia, I say she's the only central banker in the world who actually knows her job. She raised interest rates a little bit just to cool it off. But they have labor shortages. And one of the reasons they have labor shortages is not only did they put the economy on a complete war footing, but so many people are enlisting in the military that they can't get workers in their 20s. I mean, this is the myth in the West, what you would read in in the Sydney and Melbourne newspapers, or the Financial Times, or the Economist, the New York Times, Washington Post, etc. Is Russia, the troops the morale is low, they're poorly trained, their officers are all sitting around drinking vodka, they don't have a doctrine, military doctrine, etc. They're all lies. Every single one of those things is a lie. The fact is, they're winning the war. They're advancing on the entire battle line from Avdiivka to Kupiansk, and Liman, and a number of Bakhmut, and a number of other points in between. They're advancing, but the Russians take their time. All you have to do is look at the Eastern Front in World War II. I mean, there were get the number right, 20 million people killed in combat, and I think another 10 million civilians. But the Germans came in and they killed 5 million Russians, and the Wehrmacht said, "Okay, we're on the outskirts of Moscow. We've taken Stalingrad. We've surrounded Leningrad. We've today's St. Petersburg. We killed 5 million Germans, or sorry, 5 million Russians." But then the Russians came back with 5 million more, and then 5 million more. In other words, the Wehrmacht and the German intelligence had no idea quite what they were dealing with in terms of Russia's ability to mobilize, and that's still true. But you look at the Battle of Kursk in 1944, late 43, early 44, they didn't rush into anything. They had a war of attrition. They wore down the Germans, and then they surrounded them. They enveloped them in what's called a cauldron, and they annihilated them. But they weren't in any hurry about it. And it was only when the Germans had been annihilated that they moved through Warsaw and Berlin. Well, they're doing the same thing in Ukraine. They're not marching to Kiev, not yet, give them time. But they are annihilating the Ukrainians on the battlefront. And now that the U.S. Congress looks like it's not going to approve any further aid to Ukraine. The EU did it reluctantly, but even the EU, I think it was 50 billion euros, if I'm not mistaken. But Hungary insisted that be in 4 annual installments, not all at once. So whatever that comes to, it's like 13 million. 13 million euros is not going to, that's barely enough to pay the oligarchs in Ukraine. And the US is contributing nothing right now. So Ukraine is losing badly on all fronts. But getting back to the economics of it, which is where we started, the Russian economy is booming. They're running a little hot. They have labor shortages. They're on a total war footing. They're making several million 155 millimeter shells per year. The United States and NATO's arsenals have been depleted. We don't have any more 155 millimeter shells. That's why we're sending them these cluster bombs, because that's all we have left. And so how did the Western arsenals get completely depleted? That was the other thing. We're going to wear the Russians down. There'll be nothing left of them by the time we're done. Again, the opposite has happened. The Western arsenals are depleted. The German Leopard tanks are blown up on the battlefield. The British Challenger tanks are blown up on the battlefield. The United States sent them some Abrams tanks, which is our top of the line tanks. The Pentagon called Zelensky and said, please don't use them, because we don't want any pictures of them burning on the battlefield. It's really bad for sales. So they have some Abrams, but they won't use them because they know the Russians will blow them up with mines, drones, artillery, and bombing. So yeah, it's kind of, the world's turned upside down. But again, just to summarize, whether it's Ukraine, strategic metals, uranium, which you mentioned, energy generation, industrial production, deindustrialization, you can't understand, and they're all big topics. You can't understand any of them separately from the Green New Scam, and financial warfare, and a lot else going on the political side. And look at the U.S. stock market, which I don't know why I bother looking at the ticker. It only goes up, so I don't like I check it. Oh, it's up. Oh, what a surprise! It only seems to go up. It's at all-time highs. People say you can't spot a bubble, and I completely disagree. I don't think there's anything easier than spotting a bubble. The hard part is knowing when it'll burst.
Yeah.
Because bubbles run on narratives, they run on stories. And as long as people believe the story, it'll keep going. Whether the fundamentals are there, doesn't matter. They just believe the narrative. And right now, at least in the US, the narrative, and I emphasize the word narrative because it's just a fairy tale, is the soft landing. Yeah, we had a 3-year bad patch with the pandemic, and then the supply chain disruption, a couple of wars, and then very high inflation in 2022. So from 2020 to 2023, really, we had to get through all that. But now, thanks to the genius of Jay Powell and his interest rate policy, they call it the Goldilocks theory, not too strong, not too weak, just right.
That's right.
And then soft landing is the other, that we had a bad patch, but we're coming in for a soft landing. All nonsense. There's no such thing as a soft landing. If an array of indicators that have a very good track record over decades or longer of indicating a recession are all pointing in the same direction, they're all saying, yeah, the recession's coming. May not be here yet, but I'm talking about inverted yield curves in the treasury market, inverted SOFR curves. SOFR is a system overnight financing rate. That's the new LIBOR, if you want to think of it that way. They trade on the CME Group futures, but negative swap spreads. Some of these things are a little technical, but just to take an inverted yield curve, a very simple example. A normal yield curve, it's along the x-axis you have the maturity, and along the y-axis you have the interest rate, and it goes up from left to right. It kind of slopes up gently, and all it says is that longer maturities have higher interest rates. So if I lend to you for a month, I might charge a certain interest rate, but if I'm going to buy your 5-year bond or your 10-year bond, I'm going to want a higher interest rate because there's more risk, more things can happen, credit risk, inflation risk, political risk, etc. Well, that's the normal state of affairs. That is not what we see today. What we see is called an inverted yield curve, where as you go out the maturity curve, the interest rates go down. Right now, today, the 3-month bill, which is, I think, is one of the shortest maturity U.S. Treasury bills, is about 5.1%, a little higher. And the 5-year note and the 10-year note are around 4.1%. So why would you take, I'll use round numbers. Why would you take 4%
Over
on a
time.
10-year note when you can get 5% on a 1-month note? What's up with that? Well, what that's telling you is telling you something. It's very powerful.
Okay.
Because this market is the big money. These are banks, hedge funds, sovereign wealth funds, the largest pools of capital in the world, and therefore, in theory, the most sophisticated investors. When they're betting that interest rates are going to drop 6 months and a year from now, what they're saying is there's going to be a recession.
Today's discussion has brought to light crucial insights into both the Russian economy and the indicators pointing towards a potential recession in the US. From Russia's booming economy amidst labor shortages to the inverted yield curve signaling economic downturn, we've covered a wide array of topics. Your engagement and interest are greatly appreciated. Don't forget to subscribe to our channel for more in-depth analyses like this video and share your thoughts in the comments section below. Your feedback is invaluable. Thank you for watching, and we'll see you in the next video.